There's nothing quite like the smile on your client's face when they see their loan is finally getting approved and it is approaching closing. Closing on the loan is a process that involves the lender's final wrap-up of the loan terms. It's what your buyers are waiting for and what your sellers are sitting on the edge of their seats for. There are several key steps in the process before the keys change hands. It's likely you'll spend plenty of your time waiting for the call that says the loan is ready to close. So, what does that mean? Now that the underwriting process is complete, the lender is working towards completing the loan formally. A key component of that is in issuing a loan commitment to the borrower. What's a loan commitment? The lender at this point is ready to agree to the terms of the mortgage and wants to move forward. A mortgage commitment or loan commitment letter is sent to the borrower outlining the specifics of the loan. During the underwriting process, everything's checked and double-checked. Then, this letter is sent to your borrower providing information on the status. The loan commitment will provide all of the information everyone involved needs to have in order to move towards the next step. This will include the amount of money to be borrowed, which is generally the home's sale price minus any down payment. It's the amount the borrower needs to buy the home. The letter outlines explicitly who the home borrower is. It will list the names of those involved in the purchase. It also lists the terms of the loan, including its length, key conditions, interest rates, and any other financial terms the homebuyer agreed to in order to obtain the loan. The letter will also describe the property being purchased with the loan. This is done by its address, but it may also include information about the type of home, such as the type of structure, size, and use. Does that mean everything is ready to go forward and everything is just fine? Not quite yet. Yes, this can be the frustrating part about the loan commitment, but it is also where you and your homebuyer and seller need to come together to get things wrapped up. Conditions or contingencies are often listed in the loan commitment letter. Unfortunately, conditions are not uncommon. Conditions are specific steps that the parties involved must take before the loan can get final approval. These are often issued by the underwriter on the loan. As long as the conditions are met, the loan will move forward. Conditions may include things like proof of mortgage insurance when it applies to the loan and proof of homeowner's insurance. In some cases, there is information that is missing. The conditions may be dependent on providing proof or documentation of various assets or other information. Documentation to verify income, debts, or assets, or proof that existing debts are paid off are common conditions as well. For example, the home buyer may have to pay off a specific amount of credit card debt to improve his or her debt-to-income ratio before the process can move forward. Nearly all loans will require proof of homeowner's insurance as well as title insurance. The home buyer will need to ensure these are set up and ready to go as soon as the home sale goes through. Documentation from the insurers is often the first step in meeting this contingency. In some cases, your home buyer may have seen some changes to his or her credit report in the month or so leading up to the loan closing. The lender may request information about this, such as why they've had a substantial withdrawal from their savings account or where specific deposits or transfers came from. It's important to educate your buyers that such transactions can stall or even eliminate the closing process. Many loans require that money is not borrowed for the down payment on the home, and such transactions can signal this occurring. It's also quite common for contingencies to exist for existing homes. For example, the loan may be ready to go for the new home being purchased, but it is dependent on the old home being sold. This can cause a few delays in the process. Some real estate markets just are not moving as fast as others, and this can mean that there's a slowdown in the process. It is not uncommon for the purchase to be halted until an existing home is sold, because carrying that amount of debt in 2 mortgages is too risky for the lender. The loan commitment document will also continue information such as the expiration of the offer for the loan. We've met all the conditions and contingencies. Now what happens? The final step in the process is the property closing. The loan is officially closed and in place during the physical signing of documents with the home buyer. The closing of the property is only complete when the deed is then transferred by the home seller to the lender and home buyer. That happens after the home buyer's lender funds the loan and sends the proceeds of the loan to the escrow company or the home seller directly. Your home buyers will sit down with a title agent to sign a stack of documents in this process. They have the right to ask questions about any component. And after those documents are signed, they are filed, the loan's funds are transferred to the seller, and the property is legally noted locally. All of this is handled in a matter of hours to days, and generally by the title agency and the home seller's agent and lender. You'll be kept in the loop as a home buyer's agent about process timeline. And eventually, you'll get to put the keys in your buyer's hands. At this point, and really only at this point, you can shake their hand and be confident that the home sale is in place and you can move on to your next buyer.